Cryptocurrency investing is definitely not for the faint of heart. Even in the bull market that we're in today, we still see major, multiple pullbacks in the Bitcoin price, usually followed by a recovery after that. But this volatility can really make you sick to your stomach. Some people see these as dips, as, buying opportunities. But what happens if that dip ends up becoming a crash and the market enters another, multi-year bear market, crypto winter like we saw in 2017? I was around when that happened. I've been making YouTube videos ever since. Well, there's a few different schools of thought on that. Some people think that we won't see a big pullback like we did in 2017, that this time is different, that we're at a super cycle and it's up only. And then on the other hand, there are people who think that, no, this cycle is basically just like the last one, just on a bigger scale. So which is it? Well, that's literally the $1,000,000 question for a lot of people. And that's exactly what I'm going to talk about in this video today as a blockchain developer who works this technology on a daily basis and as a cryptocurrency investor myself. So before we get into that, if you're new around here, hey, I'm Gregory. And on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step-by-step from start to finish, then head over to dappuniversity.com/bootcamp to get started today. And last but not least, I hate to add these disclaimers, but this is not financial advice. I'm not telling you to buy or sell cryptocurrency based on any of this information. And there's lots of people impersonating me down in the comment section below. They're all scammers. I'll never give you my phone number or ask you to invest with me. All right, so let's get into this. Let's first, outline clearly each position. So the first is the super cycle thesis, which essentially says, this time is different. This market cycle is fundamentally different from all the cycles prior to it. And that it's sort of up only in this case, that the price is in, long-term trend upward with maybe some milder corrections without this, multi-year bear market, maybe at least for a long time. And so that might look something like this, a longer general upward trend with gentler undulation, maybe some, big corrections, but general upward trend, as opposed to a cycle that looks a lot like the last one where it was a boom and bust cycle. And the idea here is that history is essentially going to repeat itself and this market has a fundamental nature that really hasn't really changed. And so that cycle would look like this, you know what I mean? And then boom, and then followed by a multi-year bear market. So let's start off with the super cycle thesis. And the first place that I heard this term actually used was in this post by Dan Held, where he outlines the idea of a Bitcoin super cycle and why that might be happening now. He says the typical assumption is that, the Bitcoin boom and bust cycles, which I was talking about a second ago, are typically around 4 years. And some hypothesize that these cycles are induced by the halvings, the Bitcoin halvings that happen approximately every 4 years, that reduce the new supply. And assuming that the demand for Bitcoin goes up, you see these big, booms in price. So he thinks that this cycle is different. And he gives lots of different reasons for that. So the macro backdrop, talking a lot about, the effects of inflation that are happening in the economy right now, and Bitcoin as being a really good store of value as a hedge against that inflation. He talks about institutional adoption of cryptocurrencies and how that was sort of the meme narrative at the end of 2017, but it was too early for that, but that we're seeing that happen now. He says that Bitcoin has converged around a singular narrative about it being like gold 2.0 and a strong store of value rather than a payment system and all these other competing ideas, and that it's a lot easier to use today and onboard new users, like people can just buy Bitcoin in their PayPal accounts. And he finally concludes saying that all these things, combined together point towards what could be a Bitcoin super cycle, and that this may be one of the final big cycles before we just have smaller ones after this. And so that's what a super cycle would look like. So we have lots of other people who hold very similar ideas to this. We've got people like Mike Novogratz, the CEO of Galaxy Digital, saying he thinks that we're not really in a bubble like 2017, but that we're in a movement now. And so there's lots of supporting evidence for the type of thing. And we talk about big institutions buying in. We've seen MicroStrategy leading the charge with over $4 billion in Bitcoin holdings after really kicking this off, last summer. We've seen Tesla, a big name, buy $1.5 billion of Bitcoin for its balance sheet. We've got Kathy Wood from ARK Invest talking about the modern investing portfolio, including 20% allocation in cryptocurrencies. So there's lots of data to suggest that this time is different, that this cycle is somewhat different from the last one. Now, that being said, on the other hand, all these things that we see as different from the last time, does that really just bring in all the market participants that we need to actually create a new cycle to begin with? That's what a lot of other people think, that the data shows that this market cycle is basically just like the last one with a new set of participants that can actually bring the price up. And that's going to end a lot like the last one did, with a major, nasty correction followed by at least a 1-year bear market. That's really what the boom and bust cycle thesis says. That history essentially will repeat itself. So there are lots of different factors to support the boom and bust cycle thesis as well. Okay, so people cite the Bitcoin halving event, every 4 years as being a big factor in the price increase. And that we've seen this in the past where Bitcoin essentially reduces the rate at which new Bitcoin is added to the supply. And that's almost always resulted in big price increases in these, bubbles that happen. And it creates this boom and bust over and over again. So all the evidence to back this thesis up is essentially that the data shows that the exact same thing is happening again. If you look at the stock to flow model here, which puts the Bitcoin price over the stock to flow chart, then it's basically tracking like it's supposed to. And the other assumptions here that history won't necessarily repeat itself exactly, but that it will probably rhyme, that human nature hasn't fundamentally changed, and that we'll see another 4-year cycle with a big parabolic blow off top, just like we did before, followed by a long downtrend. All right, so what are my thoughts on this? Where do I think we personally are? So as always, it's not financial advice. I'm just going to kind of weigh in on what my personal strategy is and what I think is likely to happen. Okay. So as always, I'm not a big trader. I'm not a big TA guy. I'm a developer. I work with this technology every single day. I've watched these markets for years. Do I think the super cycle thesis is even possible at some point ever? Well, I do think as cryptocurrency adoption continues, and if it does become really widespread, that major market cap cryptocurrencies like Bitcoin can become less volatile and eventually escape these major boom and bust cycles. Now, the $1 million question really is, are we there now? Or do we need more market cycles to eventually achieve that? Well, the short answer is this. Nobody knows for sure. So for me, I look at it this way. It's much safer for me to assume that history is probably going to repeat itself, that the nature of the market hasn't totally changed, that we're probably going to see another boom and bust cycle before we eventually reach that, super cycle that just sort of takes us off to infinity. Now, that being said, I'm totally open to being wrong about that. And in a lot of ways, I'll be happy about that because what I plan on doing is watching for indicators of that and adjusting as I watch everything play out. Now, some people say that's dangerous. It might be dangerous and it's not financial advice for you. But what's even more dangerous is to just assume that we're on an up-only trajectory, that now is the super cycle, that we're never going to have a correction, and then the market, absolutely crash and lose all your money. That's way more dangerous. And so that's why, I plan on hedging risk, not buying more than I can afford to lose, and counting on the fact that I'll never see the perfect opportunity to sell, that I'm always going to kind of kick myself a little bit that I didn't get out at the right time. Now, that being said, crypto is not all created equally. So I'm talking mostly about what's happening with the Bitcoin price right now. So lots of other smaller cryptocurrencies can completely die off and fade away regardless of what's happening to Bitcoin. So even if Bitcoin does enter into a super cycle right now, that doesn't mean that your low cap altcoin gem is just going to blast off to infinity. It could totally have price action that's independent of what Bitcoin's doing and can go to zero. And also, if we are in another boom and bust cycle, then another thing I can see playing out is the cycles being much gentler for older assets. So what do I mean by that? So let's say Bitcoin previously dropped by 90%, then 75%. Then maybe this time it's much shallower, 50%. And then something like Ether, instead of dropping 90 something percent, might drop 60, 70%. But brand new coins that have not endured multiple market cycles could lose 98% of their value. So as always, again, that's not financial advice, but that's how I could see that playing out. And the last major thing I want to bring up here is that the cryptocurrency markets are not in isolation. As much as we'd love to see Bitcoin decouple from the stock market and not have a correlation anymore, I think we're still correlated to stocks, especially to the downside. So essentially, if something bad happens and there's a massive bubble in the stock market that pops, then it's probably going to affect Bitcoin as well. There's lots of people who look at the macro scene and think that we're in an everything bubble and that bubble could pop anytime. And if it does, then that's likely going to affect cryptocurrency prices as well. That could be the factor that really invalidates the up-only super cycle thesis as well. All right, so that's all I've got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. It really helps these videos out so the more people can learn about blockchain. If you like these videos and you're as fascinated with this technology as I am, then how can you get your hands dirty and get started today? You can go to my YouTube homepage. You can find any of my free courses there, Udemy courses, but they're totally free. If you like those, you want to take the next step, or hey, if you want to take a master shortcut entirely, I can show you how to become a blockchain master step-by-step from start to finish over at dappuniversity.com/bootcamp. Okay. You don't have to be an expert to get started today. I've helped people with zero coding background become real-world blockchain developers in a matter of months. All right. So that's all I've got. Until next time, thanks for watching Dapp University.